My name is Zachary Bauk. I'm Chief Investment Officer of Denver Wealth Management. Today is Friday, March 27th, and as I was getting ready to do this little video, I started thinking about everything I wanted to talk about. And I started putting together the stats for the week. Best week in the Dow Jones since 1938. Best week in the S&P since 2008. Worst month for the stock market since the Great Depression. And as I was putting together all those numbers, I realized you guys don't need to hear that from me. If you want to go get the numbers, the stats, you want to see the blood in the streets, you can turn on CNBC, you can turn on any news network, and they'll tell you what the stock market did. That's really not my job. My job is to think about what we can control as investors. And if you've been in our office, you've had coffee and you've had it in one of these mugs. And on these mugs we have the 10 principles we follow as part of the Denver Wealth Management financial planning process. And what are principles? Well, principles are things that you do even in challenging times. And a few of these are with cash flow, and a few of these are with debt, and a few of these relate to investing. And I wanted to tell you our principles as they relate to investing. And the first is utilize automatic, systematic savings plans. You need to use automated savings plans because in these trying times when the market's down as much as it is, it can be very scary to put your money to work in the market. But if you have an automated savings plan, the work happens for you. So definitely don't stop putting the money into your 401ks, into your Roth IRAs, or anything during this time. This is the time to stick to your automated savings plan. That's number 3 on our list. Number 9, this is a kind of a cool one that I like, and that's to accept market volatility as a natural and positive side effect. That's my 3-year-old running around there in her pajamas with a flower. Oh, she's gonna, I think that's Monsters, Inc. Accept market volatility as a natural and positive side effect. That's kind of a controversial one because you can think, why would market volatility be a positive side effect? Well, it's positive for 2 reasons. First, there's something we call, fancy, it's called the equity risk premia. What it means is that you get paid more over the long term to own equities. Well, why would you do that? Why, if equities make on average 10% a year, why do they earn 10% a year? They earn 10% a year because you get these volatile times. So essentially, the reason you earn 10% a year is because you get these really bad months, and because of that, you're rewarded as an investor. The second thing you get in the stock market is you get these opportunities to buy at substantial discounts to where investments were trading before. So I don't know the exact numbers. Boeing went from 440 a share down to 100 a share. That's a long way down for one of 2 airline manufacturers in the entire world that can create planes at the rate Boeing does. The second is Airbus, which is a European company. The second opportunity you get when you're an equity investor is that when the market drops substantially, you do get these opportunities to buy companies on a remarkable sale price that you wouldn't get otherwise. So go watch the news, figure out what the stock market did this week. It was down a lot and then it was up a lot. But what's more important is to stick to your principles. Our principles at Denver Wealth Management is that we invest for the long term, and we're not afraid to take advantage of opportunities when we see them come about. So right now, with the market still down almost 20% from its all-time highs, there are still opportunities in the market. We're happy to look at your portfolio and happy to answer any questions that you may have. We will be doing some Facebook live streams next week. I did not realize they were recorded, but you can, I messed one up. But basically, you can go onto our Facebook page and see our daily live streams next week. Thank you.